Well, in addition to the jobs number and tech earnings, markets still have to keep their eyes on trade tensions as well as President Trump adds tariffs on many countries, including Canada. Joining us now, former Deputy Assistant U.S. Trade Representative and Adjunct Professor of Law at Fordham University School of Law, Matt Gold, and Zoe Liu of the Council on Foreign Relations. It's great to have you both here. Zoe, I'm going to start with you, because in a week where the data is suggesting maybe you're starting to see some signs of possible stagflation percolating, just looking through your notes, you basically acknowledge the fact that tariffs are not necessarily directly inflationary. How do you game this out right now when that's such a big part of the economic conversation? And we're looking at potentially 15 to 20% average effective tariff rate here.
Yeah, absolutely. If I put my econ hat on, econ 101 would suggest that a tariff would be inflationary by raising prices, and American consumers would be ultimately bear the cost of tariff. But here I would say there are two other factors at play in reality. The first one would be how American importers, especially wholesalers, can pass on the tariff effect to their suppliers overseas. And then the second part would be the broader impact of US dollar versus other currencies in the foreign exchange market. If hypothetically, if dollar depreciate further against major currencies, that would theoretically make American import more expensive and create more incentive to buy in America.
Matt, there's a legal challenge to tariffs afoot right now. How do you expect that to shake out, and how does that play into the tariff talks that do continue with some countries like, as we mentioned, Canada, but also Switzerland and even China?
Yeah, there is a challenge to the bulk of President Trump's new tariffs over the last 6 months. Those are the reciprocal tariffs. At one point, they were called the Liberation Day tariffs. President Trump attempted, or actually did, impose those tariffs under a statute called the International Emergency Economic Powers Act, or IEEPA. The Constitution gives the Congress the tariff power. The Congress imposes tariffs, but the Congress also enacts these statutes that give the president the authority to impose tariffs in narrowly defined situations. But the IEEPA was never before seen as authorizing a president to impose tariffs. It was seen as only authorizing a president to impose non-tariff trade barriers. And President Trump didn't just use it to impose tariffs, he used it to impose tariffs on a very broad array of types of goods and countries of origin of the goods, so that even if it did authorize tariffs, it probably could not constitutionally authorize the president to impose such a broad array of tariffs. That's too much of the authority being given by Congress to the executive branch. Constitutionally, that wouldn't even be permitted. And so there was an appeal. The first level appeal, the U.S. Court of International Trade, or CIT, struck down the tariffs, and the tariffs would have already been removed. But the Court of Appeals, when it was appealed to the Court of Appeals for the Federal Circuit, the Court of Appeals blocked the lower court order and said the lower court's order should not stop the tariffs yet. So the tariffs are still being collected, and the higher court, the appellate court, heard oral arguments yesterday. The appellate court in the oral arguments really expressed skepticism that the tariffs are legal, that they are authorized by the IEEPA. I think the CIT was right. I think the higher court of appeals is right. And I think ultimately the higher court of appeals is going to uphold the lower court, strike down the tariffs, and I think the Supreme Court is going to uphold it also.
Well, Zoe, though, it sure seems to me like the president and the administration will just change their rationale for tariffs to something else if this particular use doesn't apply, and they're more nimble than the the judiciary branch and the legislative branch. So when it comes to China, assuming that the president maintains his tariff powers and those trade talks continue, how do you expect the likely scenario with those talks to affect the markets for the rest of the year?
Perhaps so far, the one trade negotiation that the market cares most is U.S.-China trade negotiation. And I'm hesitant to describe any of the current trade deals as trade agreement, or for that matter, deals, is specifically because there is little concrete details that are known to us. So from that point of view, I think this is actually very much to the benefit of the Chinese trade negotiators, or for that matter, the Chinese government, for two things. The first part is that so far, China seems to be able to get whatever they are willing to get, especially with regards to pressing the U.S. government to relax export controls. And by the way, if we can dial the clock back a little bit, it was starting from 2018 that President Trump, during his first term, he dialed up the pressure with regards to export controls against China. And now, so far, it seems that the Chinese government has been able to pressure the Trump administration to relax that. And then second part, given that so far a lot of these trade so-called deals does not include a lot of details, there is no incentive for the Chinese government, or for that matter, any Chinese trade negotiators, to put down any concrete details.